for me to relate to a lot of you, okay, some of you might have seen my story at some point, but it's important that you understand not just the tip of the iceberg. I don't want you to see me as, oh, hey, he's a consistent trader that lives in Portugal and trades off a laptop by the beach. By the way, I don't trade on a laptop by the beach. But if you can understand that I went where all of you are currently and where all of you are going, you'll start to see that my story is no different to yours. I'm just started doing this a little bit sooner than most of you. Okay, so when I started as a graduate on a trading floor. Okay, I had two mentors, both very strict and both very process-oriented. In other words, at the end of every single day, we sat in a chair opposite the mentor, and he said, tell me what are the 3 things you did badly today. Tell me what are the 3 positives, and I did that for 6 months. Okay, so I had one-to-one mentoring when I started as a trader. Now, in 14 months, I broke even. Okay, so I lost money, just like everyone else. Okay, I had a dip in the equity curve. After year 1, I was down 13,500 euros. Okay, I lost money. And in 14 months, I then broke even. So my equity curve was back to 0. Now, I would make on average in my first/second year about $250 a day, trading 1 lots. Okay? I was predominantly trading German bunds. That was my primary market, as well as the Euro Stoxx 50. And our costs at that point were around £2,500 per month. Okay? So think desk fee, think charting software, think execution software. That's kind of, what we had to deal with back in 2011 when I started. Right? The costs today are substantially lower, obviously, but that was our break even. Now we'll talk a little bit about break evens later when doing a business plan. And ultimately in my second year, I got the first sort of experience and taste of the concept of leverage. Right now, because for the first 14 months, I was so used to and familiar with trading 1 lots. In other words, if you're a futures trader, it's the minimum increment size. It was very difficult for me to understand this concept of how do I trade a 3 lot or a 4 lot or a 5 lot. I'm so used to, maybe having a daily stop of $300. Now suddenly I put 1 trade on and bang, I've lost $500. Right? So the psychology of it didn't make sense to me. It was difficult. It felt hard. It felt like, how do I take that next big step forward? And obviously the senior guys would say, oh yeah, it's easy, you just put the trade on. Okay? But the reality is you had to grow into that. You had to naturally take that step forward through a number of different experiences, lessons, practical applications. And at some point, I was no longer a 1 lot trader. Now, a lot of you will deal with this at some point. You're going to say, well, how do I step away from risking $100 a day to risking $200 a day? Because the reality is, you're not going to make good money out of this job unless you start to take more risk. Okay, now what we'll talk about later on is there is a process to taking more risk. It's not just a case of, hey, I feel good today, I feel confident, let me risk $500 or let me risk $1,000, or hey, that guy on Twitter says the same thing I say, let me put some more risk on. There is a process to growing bigger, okay, and we'll talk a lot about that so that, again, you can walk away from today saying, well, you know what, actually, I'm going to implement these steps and that's how I'm going to transition from 1 to 2 or $100 to $200 to $300. So year 3, I got to $100,000 pounds. Let's call it pounds because we do sterling in the UK, okay? And that was a big breakthrough for me. Yeah, I came from South Africa. I didn't come from a stupidly rich family, typical middle class family. I was in London and it felt great, £100,000. I mean, wow, that's more money than any of my brothers were making. Okay, and I have 4 older brothers, so naturally I was better than them, okay? The point is that year 3, the confidence starts to brew. I get this game. I understand what I'm doing. Clearly my account balance is £100,000. And then in year 4, Alex spoke about Cape Town. I had this dream of now going back to the beach, flip-flops every day, beach shorts, living by the beach, living the dream, as they say. And the wheels came off. Okay, I blew up. I pretty much in a space of 3 months blew out my entire account. Okay, I've been from 100K back to 0. I did it slowly. 3-4 months is quite a long time to take that sort of pain and torture. And it was a difficult stage for me because initially there's a lot of denial. Right? Alex was there when I phoned him. I was lying on the back of a bench press. I remember I was in the gym in the Cape Town office and I was lying back, staring at the roof, talking to Alex, crying a little bit on the phone. And the reality was, yeah, I got caught out in something that was technically 100% not supposed to happen, but it did happen. Okay? The key takeaway and why I share that with you is that you're all going to go through a hard knock at some point. Now, there's two reasons why I share this lesson with you. One, you don't have to do the 100% drawdown. That's rubbish. Okay? That's something, again, go type in YouTube, how I lost 3 trading accounts and bounced back. Okay? It sounds sexy. There's nothing sexy about losing your account. In fact, it's stupid to lose your entire trading account. Now, I wish someone had said to me, Brannigan, that's stupid. You cannot put an entire trading account at risk. But we didn't have the kind of education you have now. We didn't have the kind of guidance that you have now. No one was there to tell you, that's dumb. You need to put some parameters in place. There was no such thing as risk models. There was no such thing as automated risk strategies when I started trading. So that kind of thing happened. Now, most people do not bounce back from 100% drawdown because most people don't have more capital coming in. I got backed by one of the senior traders. Most of you will know who that is. You'll know who he is. I got backed by a senior trader who thought I had potential. And I got a second chance at this game. Fast forward, year 5, I recognized that there was a lot of loose ends in the approach I was taking. Okay, there was a lot of things that needed to change. And that's where I became very, very sort of focused on different processes, different methodologies. How do I solve the problems? How do I avoid ever having 100% drawdown? It was that year 5 that kind of pushed me into that sort of direction as a trader, to become very, very objective in the way I see things and very analytical and data-driven. Okay, not to say I'm automated. I'm a discretionary trader. I take risk as a discretionary trader. But I use systems to solve a lot of the problems for me. And systems is a very, very fancy word for I go into Excel and Excel tells me what to do. Very, very basic stuff. Okay? Year 6 now, fast forward from year 6 on, everything for me that can be automated is automated. Simply because automated systems will make better decisions than me at the end of the day. Okay? Now that's where we're going to go today. I'm going to share with you this full spectrum. I'm going to show you from year 1 to year 6. I'm going to show you how it all works out, how it all looks as a trader. Okay, so one of the key questions, and this is something you can learn from. A lot of people say to me, why do you think you survive? Why did I survive and most other people don't? First of all, the reality is I found a way to survive for long enough to learn enough to become profitable. And that's key. Don't think of trading as you're going to learn and then you're going to become profitable. It doesn't work that way. You're going to learn your entire career. You're just going to learn to stop making as many mistakes. Okay, that's the key. And the moment you stop making as many mistakes and you reduce the mistakes, you become profitable. And then as you eliminate more and more mistakes, then you become really profitable. And when you effectively make very few mistakes, that's when you become a top performing trader. Okay? I kept costs low. This is very crucial. Keep your costs down. Right? Capital is limited for most people. Keep your costs down. Number 3, growth mindset. Okay, I was like a sponge. I would look at the senior traders, I would look at guys around me, see what their routines were, see what they were doing day in, day out, see the things they were saying. I didn't copy it, I made a note of it, I went and I thought about it. Hey, he comes in at 6. Well, why is he coming in at 6? Well, actually, it makes sense if you come in at 6 because then you have an hour to prep, you relax by the time the open comes. Hey, this seems to work for me, adopt. And I did that with everything. Hey, these guys keep trading this thing called Apple. Apparently it's a company in the United States of America. I came from South Africa. We didn't know what Apple was in 2011. Apple, okay? It was just when the iPhone 1 and then iPhone 2 had come out. And so they traded earnings. I thought, let me stay behind, watch what they do. Hey, okay, the NASDAQ moves like this. Apple earnings, okay, earnings is this. They beat on the earnings per share, therefore I sell. And then you adopt. It works, you adopt, okay? So you need to emulate those traders and listen to those people that you hold in a high regard. Okay? Number 4, I was very holistic. Not by nature, but I didn't have an option. Okay, I flew here from South Africa to London. I didn't have a job. I didn't have an income. So I didn't really have too many options. But I knew I was going to give this 2 years. I knew I was just going to try it out for 2 years. If it worked, it worked. If it didn't, it didn't. Okay, so I was holistic from day one. I didn't need to get rich quickly. I didn't need to make money quickly because I had X amount of savings and it either worked or it didn't. And then number 5, luck, luck, luck. You need a lot of luck in this game. Okay, anyone that tells you otherwise is talking rubbish. You need luck. But luck will meet opportunity. In other words, you'll do the hard work, you'll do your time. At some point the market's going to present something to you that makes sense. You'll be in the right frame of mind, you'll have the right tools available to you, and you'll execute, and you'll make a lot of money. That's this game. Don't think otherwise. This isn't a game of coming in every day and you knock it out the park. It doesn't work that way. Sometimes what I like to remind myself, okay, tough year at the moment, by the way. Market conditions are tricky. Anyone that tells you otherwise, again, is talking rubbish. These are difficult, tricky market conditions. What normally makes sense is not quite making sense at the moment. But the reality is that you've got to stick around. You've got to wait, because at some point the market's going to show its hand. And at that point, guess what? You make the losses back very quickly. I was talking to Joe. Joe's a guy I talk to every day on Discord for about 20 minutes pre-US session. And I was moaning, 2 weeks ago, I was moaning to him. I was like, oh, bud, I'm quite heavily down this year. This is an unusual territory for me. I'm not someone that's down. Okay? I'm quite consistent on my month-to-month basis. And I said, I'm struggling this year. And so I told him, he said, bud, what you worried about? You'll make it back in one day. Okay? But because of the psychology, and we'll talk a lot about psychology, because of the psychology in my head, I'm going to have a down year. I'm going to lose money this year. This is tricky. But in actual fact, when you step away from it, you look in, you say, well, yeah, of course, I can make that back in a day or two. Okay? It's a good week's work when the conditions are there. Okay? But you need that luck.